Good morning, everyone, and welcome to the PivotBoss pre-market video for Thursday, March 11th, 2021. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. Right now, the ES trading higher by about 2/3% right here. Higher highs, higher lows over the last several days, and we're now approaching major overhead resistance where the market has turned down several times already. In overnight and pre-market trading here, the ES has basically gone sideways for multiple hours, at least 7 hours straight of going sideways within a very narrow range at times. That can be seen as a very heavy overhead range that can lead to a pullback of sorts. So if there's any failure to hold 39.15, perhaps especially 39.10, that could open up quite a pullback here for the day. Again, overall the market remains strong, so perhaps a pullback could be met with buying pressure. But anytime you sit at highs throughout the overnight and pre-market trading here in a very narrow range, there can be a breakout opportunity that occurs. So watch 39.15. Any failure to hold that level could open up a bit of a pullback ahead, especially with overhead resistance looming. If we take a look here at the NQ, the NQ looks very similar. The NQ has been going sideways for the better part of 5 hours here at these highs. It's testing the overhead 13,000 level, which has been a very clear level of resistance. And we now have back-to-back days here of kind of trading within this narrow range here of about 260 to 290 points. And perhaps we could see further breakout from this range at some point, as the market's been averaging along the lines of 450 to 460 points per day over the last 5 and 10 sessions. So very narrow comparatively speaking, but we could be looking at, again, a breakout from this narrow range that has developed at highs. Any failure to hold the 12,925 level or so could open up a pullback for the day. That could take this thing all the way back toward the day's lows even, if you really wanted to. Again, 13K is going to be the key here. Can it get through that level and start to push higher, or will the overhead pivot range and these PEMAs become too much resistance? Right now, again, for the ES and the NQ, continue to watch those narrow multi-hour ranges. Let's take a look here at crude oil now. You'll notice with crude oil eventually bounced late in the day yesterday out of the PEMA trigger zone here. We have now developed a very clear key range, and that key range is going to be very important moving forward in the near term and also perhaps over the next several months. But you can see right here the high of that key range, the low down here, and that gives us this box. We reached the midpoint here yesterday, and that is going to be very important moving forward. Again, even if price were to drop down into the bottom of the key range, there could be a bounce back up, as the market will likely tend to build out inside this key range for the foreseeable future here. At right now, you do see the market bouncing out of the bullish PEMA trigger zone, which is indicative of perhaps another round of strength to new highs. Again, we've got to see how this develops here, because the market has not been able to get through 66s ever since the failure back below that zone has been resistance. 66 again will be an important level that if it can get through that zone, it may open up a retest of those 67.98 highs. Taking a look lastly at gold futures here. Gold has seen a decent bounce over the last several days, bouncing off the 1670s. Again, that 1670 matches recent support that goes all the way back to this zone right here, which was basically this time last year, mid-April or mid-March to April, May, and we're seeing a little bit of a bounce. That's not bad. That bounce could lead to more trading inside that range between 1670 and 1770. But overall, we have remained within a very bearish downtrending market here. Clear downtrending price action. We're now inside the bearish PEMA trigger zone. The last several times we've been inside that zone, we've seen selling pressure come out of that zone. So again, right now, any failure to get through or stay above the previous month's close could lead to another round of weakness down below. And again, 1660 and 1575 could be the next downside targets. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.